Hello members, this is Aman from Upmove Stocks. We hope that you are doing well. So we have been doing technical analysis of the stocks so far, and we have been discussing about how technical patterns work in stock market. So today we are going to start with our fundamental analysis series video. First of all, we will discuss with you as to what is fundamental analysis, or you can simply say what is fundamental research, because it is not possible for every retailer to go through details of financials and make financial projections for the coming years as what is expected from a fundamental analyst to do. So it is better to name it as fundamental research. However, we will be describing you how it can be used as an important tool to identify stocks in the market, and how you can use this research or analysis to make sound investment decisions. So we will be using a very practical based approach as we have been doing in technical analysis. So we hope that you would find this video extremely useful for conducting research on your own and without relying on anyone else for identifying stocks for you. So in this video, we are going to discuss what is fundamental analysis and how fundamental analysis is used to take investment decisions. So we will be covering two important parts in this video. First is what is the fundamental analysis and how it is used to take investment decisions. That is how you will use fundamental analysis for the basis of making your investment decisions. So let's start. So first of all, we will define what is fundamental analysis. So fundamental analysis basically involves the study of factors both internal and external that affect the functioning of the organization. That is those fundamentals that affect the day-to-day operations of the business. These fundamentals can be both internal to the organization as well as external to the organization. Just to say, for example, an internal factor would involve the management of the company, and an external factor would involve the policies formulated by the government. So this is the definition as to what fundamental analysis is all about. The study of internal and external factors that affect the day-to-day functioning of a company is known as fundamental analysis. So what is the objective of doing fundamental analysis? Now we will understand the very crux of fundamental analysis. Basically, fundamental analysis is done to identify the correct price of the stock. For instance, you may see a particular stock in the stock market trading at a price of rupees 50, but you don't know as to whether the price of rupees 50 is correct or not, as to whether you should buy that particular stock at 50 rupees or not. So fundamental analysis helps you in identifying the correct, or in technical terms you can say the intrinsic value of the company or its stock. So fundamental analysis is done to identify the intrinsic value of the stock, or you can say true worth of the stock. So we will describe it in a little more detail as to why fundamental analysis is actually done. So fundamental analysis is done to identify as to whether the price at which the stock is currently trading in the stock market is correct or not. We will discuss this with an example in the next slide. So you just need to understand as to why it is done. It is done to identify as to whether the price at which you are willing to buy the stock is correct or not. That is, before making the investment decision, you do the fundamental analysis with the objective of identifying the accurate or the correct price of the particular stock or company. So once you have done the fundamental analysis, you will be able to identify a price. So that price will help you in determining as to whether the stock you are willing to buy is currently overvalued or undervalued. This we will discuss, this entire topic we will discuss in the next slide with the help of an example, which will make things more clearer for you. So fundamental analysis helps you in determining as to whether the stock or the company is overvalued or undervalued. Once you have determined as to whether the stock is undervalued or overvalued, you will be in a position to make better investment decisions and that will help you in reducing the risks involved in the stock market. Because once you have purchased the stock at the correct price, the probability of going the trend against you will be very, very less, or you can say that the probability of failure will be very, very less. So why fundamental analysis is done? it is done to identify the correct worth of the stock. Secondly, it helps you in determining as to whether the price at which the stock you want to buy is currently trading is undervalued or overvalued. Once you have determined as to whether the stock is undervalued or overvalued, you will be in a better position to make sound investment decisions, and the probability of your failure will be reduced. Though in stock market it cannot be completely eliminated, it can be minimized. So let us discuss this entire concept with the help of an example in the next slide. So how to take decisions based on fundamental analysis. So this is the very important part. So let us say scenario one, when to invest, when you will invest in a particular stock or a company. So first of all, you will have to identify the intrinsic value using the fundamental analysis that we have already discussed in the previous slide. And if you see that the value that you have arrived at is less than the current market price of the stock, that is the price at which the stock is currently trading, then in that case you will see that the stock is undervalued and there is a potential opportunity for investment. In that case, you will invest in that particular stock. This scenario we have explained with the help of an example that we will share with you right now. So we have mentioned here that let us say you have to buy the stock of a company named ABC, and currently it is trading at a price of rupees 80. So the current market price of the stock is rupees 80. And after doing the fundamental analysis, you have identified that the intrinsic value or the correct worth of the stock should be around 100 rupees. It means that the stock is currently trading at a price that is 20 rupees less than its actual worth. So the stock has a potential to go up by 20 rupees. In other words, you can say that this stock is undervalued and you are having an opportunity to buy the stock at a lower price, and in the future you will be able to sell it at a higher price which is equal to its correct worth. In this case, the correct worth was 100 rupees and the current market price is 80 rupees. So this stock has the potential to go up to rupees 100 from its current price of rupees 80. So we hope that this is clear to you. In this case, you will have better chances of success than in this scenario where you have identified and made the investment without calculating the intrinsic value. So this is the advantage of fundamental analysis. You know beforehand that the stock that you are buying or the investment that you are making has the potential to provide you returns in the future rather than making some random investment decisions. So let us take the scenario 2, when not to invest or when to avoid. So if the intrinsic value that you have calculated is less than the current market price at which the stock is trading, then that particular investment can be avoided by you. Why? Because the stock is already overvalued. The stock is already trading at a price that is higher than its correct worth. So there are chances that this stock will come back to its correct worth in the near future because the fundamentals are not so strong enough to support that overvaluation. So in that case, you will avoid making investment in that particular stock or company. So we will again explain this with the help of an example. Let us say this stock of the ABC company is trading at a price of rupees 120 as of now. Okay, and the intrinsic value that you have calculated is coming around to be 100 rupees only, that we have discussed in the previous example also. So you know that the correct worth of the company's stock is rupees 100 only. However, it is available at rupees 120 in the market, that is 20 rupees more than its actual worth. So you should not be considering that particular kind of an investment that is available at an expensive price. So you can ignore that particular investment for the time being because the stock is already overvalued. It is trading at a price that is higher than its intrinsic value, and there are chances of the stock coming back to its intrinsic value in the near future because the fundamentals of the company are not strong enough to support the overvaluation of rupees 120. So we hope that we have given you some basic idea of what fundamental analysis is and how it is used to make investment decisions. first of all, you need to calculate the intrinsic value of the company or the stock, and then you have to identify as to whether the stock is currently undervalued or overvalued. That you can do by comparing the intrinsic value with the current market price of the stock. So if the intrinsic value is greater than the current market price of the stock, you have an opportunity for investment, and vice versa. That is, if the intrinsic value is less than the current market price, you should not be making investment in that kind of a stock, because the fundamentals will not hold the price that the stock is currently trading at. So we hope that this basic information about fundamental analysis is clear to you. We will be preparing more videos on fundamental analysis, which will be more detailed and which will explain you how you can do basic fundamental research from day one itself. In case you have any queries, concerns, or suggestions about this particular video, you can post them in the comment section and we will try to reply to them ASAP. So with this, we will be ending this video, and we hope that you would share this content with your friends and family members, because a lot of people want to make investments on the basis of fundamental analysis only, rather than monitoring daily price levels or doing technical analysis. So this is Aman signing off. Bye bye. Take care.